A recent Federal Reserve survey on financial stability may not be good news for the U.S. economy. Persistent high inflation and losses in the commercial real estate market seem to be the top concerns of Americans. In the latest version of the central bank's semi-annual report, it finds that 75% of respondents cite these two issues as prominent near-term risks. Roughly half of them cite concerns over bank stability after the collapse of three large firms this year. That's similar to levels seen in the May version of the report. China's economic weakness has been cited by 44% of those surveyed as a top risk compared to just 12% in May. But the Ukraine war is no longer among the top 10 concerns. A year ago, it was the top financial concern. However, the survey does not take the ongoing war between Israel and Hamas into account. That's because the survey was closed in early October. Overall, the Fed has identified several vulnerabilities within the financial system, including historically high asset valuations, including in equities and real estate. Specifically, the Fed has found that commercial real estate valuations remain elevated even as prices have declined amid high office vacancies. The Fed states that if the economy slows unexpectedly, generally high leverage levels could strain or even sink some businesses. While the banking system remains sound, the Fed notes that a correction in office property valuations and a mild recession could lead to quote-unquote significant losses for several banks and insurance companies. In addition, the high interest rates, which aim to tackle soaring inflation, could lead to sizable declines in the asset value of banks.